Hi, Dave Wilkins, Wolverine Business Solutions, where we transform your accounting and operations into strategic systems and partner with you in using them to find and make more money. Pop quiz. What's one tax that you can't do anything to reduce? Okay, time's up. Put your pencils down. And the answer is sales tax. Well, technically, there is one thing you can do to reduce sales tax. Don't sell so many taxable products and services. But that's like cutting off your nose to spite your face. Not collecting, reporting, and most importantly, not sending your sales tax that you've collected to the state on time is one of the easiest and common ways businesses can and do get into serious trouble. State revenue departments, like the IRS for payroll taxes, show no compassion or understanding or mercy when it comes to a business not sending in their sales tax collections on time. After all, this is money due the states from customers that businesses are required to collect on behalf of the state. In effect, businesses have been drafted into becoming tax collectors for the state. And over time, states have found that sales taxes can be a great source of revenue, so they've expanded their definitions of taxable sales and taxable locations. A typical bricks and mortar business operating in one location may be relatively simple, but if that same business adds e-commerce or expands into another state, things can get complicated really fast. And just because certain items you charge for, such as services, installation, shipping, and the like, are not taxable in your home location, doesn't mean they are not subject to sales tax elsewhere. Last week, two of my clients found out that software customers in other states had downloaded software that was subject to sales tax. Sales taxes have become incredibly complex, especially in states that have state, county, and local sales tax jurisdictions that can add up well into the thousands. The days of thinking you are not subject to sales tax when you do business in other states are long gone. The Supreme Court a few years ago basically gave states a green light to collect sales tax on sales that you make in other states, whether it's products or services, again, depending upon what the sales tax laws are in that state. The states can come after sellers retroactively once they've determined a business has been doing business in their state based on how they define doing business and once sales thresholds have been met. If you are thinking about or have just recently started selling in a new state, you need to get up to speed on their sales tax regulations because you don't want to end up with a hefty sales tax liability that you have to pay off with penalties because you haven't been able to collect from your customers. There are ways to stay out of trouble, but it does take effort and diligence. If you start with making sure that your billing and invoicing system is set to correctly track sales tax events, making sure you know what events are subject to or not subject to sales tax so that they can be identified correctly on the invoice. Another is to deposit all your sales taxes that you collect from your customers into a separate bank account to make sure you have the money to pay the state on time. I've seen way too many businesses that didn't do this and ended up spending the money on other things, then realizing they don't have the money to remit the tax receipts on time. Then the troubles really begin. Also, there are a number of tools available now that you can use to help you keep track of the ever-changing tax regulations in all the locations that you do business in. To learn more about sales tax management and to find out how Wolverine Business Solutions can partner with you to find and make more money, please reach out to us using the link below. If you have any ideas for other content, please let us know in a message below as well. And be sure to join our Facebook group and our YouTube channel using the links below. Thanks.